but we have different topics I think we want to cover today. And some data that you have been
exactly, and I just want to say, so on Real Talk this week, I think it was Neil Williamson had asked, maybe he had a comment or asked a question, and I don't think we had a chance to really cover that, but he mentioned.
Speaking of Real Talk, just a quick jump in, a Happy Veterans Day.
Oh yes,
to all the veterans.
Absolutely.
Like the distinguished gentleman Keith Smith that are
that.
out there. So a very happy Veterans Day to all our veterans today.
Yeah, I mean that's so important to really dedicate a day for them. You know,
to thank them for their
deserve
service.
it. Oh, absolutely.
But you were talking about Neil Williamson.
So Neil Williamson mentioned. So there was a back in the 70s. Right, there was this thing called whip inflation now, right, which was started by at that point President Ford, and I think this was around 1974. And inflation was getting out of hand, and he said, we have to take care of inflation immediately. So he said, we came up with this term, whip inflation now, right? So he came up with this big red button that had a WIN, win. Mm-hmm. The issue was that in basically saying that, he mentioned, he alluded to the fact that companies shouldn't be raising salaries at that point in time, right? Because it would cause more problem, and that people shouldn't be hoarding. Well, it really had the opposite effect, right? Basically, people said, wait a minute, if they're worried about this, I need to go out and buy more things today before this gets out of hand. Mm-hmm. And literally, it got out of hand, right? Now, just one point between 1970s and today, and the topic I want to talk a little bit about is the inflation today, and I alluded to the fact on Tuesday that I believe that inflation today is quote-unquote manufactured, and I know you said to me, could you explain that? So I will explain by manufactured. I don't mean manufacturing inflation. I just mean it's been created, and it's not an inflation that just happened. It's not an organic inflation. It's external. That's right. It's being created because of decisions that have been made, and I want to take a look at that and say, what does he mean? What does Xavier mean? So I'll point to that. But just going back to 1970, for example, back in 1970, right, the Fed balance sheet was literally, guess. I mean, I'm going to throw this at you because I know you don't know really the answer when you talk. But what would you say the Fed balance sheet? And just so you know, so today the Fed balance sheet is $8.5 trillion, meaning Fed balance sheets that they've bought that many. And I'm talking about the amount of securities that they've bought. They've bought treasuries.
So it's $8 trillion.
$8.5 trillion today. What do you think it was back in 1974?
1974.
I really put you on the spot here.
I know.
I'm sorry.
I think, if I'm correct, it was less than $1 trillion in 2008. So I'm going to be, let's go with...
Zero.
It was zero?
Zero. They hadn't even started then.
Wow.
Right? There's no data there. I mean, there were reserves, right? But they hadn't bought anything yet, right? So think about that, and think about the fact that the Fed, at least the U.S. Treasury debt at that point was about $6 trillion. I mean, how many Treasury securities were issued by the government? Today it's, I think, close to almost $30 trillion in debt, right? So think about that in the sense of what the Fed did back then, which was begin to raise interest rates dramatically in order to slow down the economy, right? The impact on the U.S. economy was important, right? It lowered inflation rapidly meaning over 6 months to 1 year. And there was a lot other things going on, but just to pinpoint on this particular point here, right? Mm-hmm. So they raised rates, but it didn't impact really the Treasury debt in the sense that the amount of interest that they had to pay, yes, ballooned, but it was so small it didn't impact what we as taxpayers had to suffer because of that, right? Mm-hmm. Now you go to 2021, right? And we got inflation. I mean, literally yesterday's inflation rate, CPI, was, I believe, 6.2% year over year, right? And I looked at the numbers. So without energy and food, the inflation was 4.6%. So that means that the 1.6% differential came from energy and food prices. That's 25% of that 6%, 6.5%, is energy and food, which is, and we talked about it, which is literally a tax on the people that can least afford, right, to pay for this, right? Mm-hmm. But let's put this in perspective. And I just used kind of the end of 2019 in order to kind of give a comparison.
I think one of the issues, if you turn to a lot of financial magazines, you're now starting to see a lot of claims, this is normal.
Yeah.
Don't worry about this. This is great news that we have inflation. It's great news there's supply chain problems. It means there's so much demand that the economy is just booming so much that companies can't keep up. And I think you have some numbers that kind of belie that.
Exactly.
that
I mean,
claim.
and I think that is what they want us to believe, that everything is just going so well
Hunky-dory.
that basically we have inflation. But let's start with oil. Oil demand back in December of 2019 was 20.889, and I'm just putting the numbers out there. It's whether it's barrels or whatever, it's just statistics.
It's such a huge number
exactly
of barrels. And
exactly.
so
So it's 20.889 today. It's 17.4, meaning there's less demand for oil today than there was back just a couple of years ago. I'm not talking about 1970s. I'm
You're
talking about a
2
couple of
months
years
before the pandemic
exactly.
when things looked great.
Exactly. What was the price of oil? Today, $80 a barrel. Back then, 54. So it's 48% higher today when the demand for oil back then was 16% lower. So why are oil prices so high? Right?
Well, tell you it's not demand.
Exactly. In other words, that's the point. It's not demand, right? It is supply. It is because we have choked off the supply.